In the name of Allah, the most beneficent, the most merciful. Today, I was reading a business recorder and there was an article regarding the ATIR Lahore landmark judgment. The judgment was regarding minimum tax under section 113. As you know, every taxpayer had to pay a minimum tax on his turnover. If the turnover exceed from certain limit, then the taxpayer have to pay a minimum tax. The rate of the minimum tax is 0.25% for distributor and fast moving goods. For other taxpayers 1.25, and for fertilizer there are different rates regarding the minimum tax. But as per law, every taxpayer has to pay if the turnover exceed to the certain limit. If the taxpayer is bearing a even loss, then he have to pay. But the judgment of the ATIR is very astonishing, that the taxpayer will not pay a tax, minimum tax, if they are bearing a loss, that no tax without actual tax payable. If there will be a tax payable, then taxpayer have to pay the taxes. As you know, I am Asif Chaudhary and I am thankful to Institute of Tax Professional who gave me a chance to elaborate this decision of ATIR. Now I will discuss all the issues regarding this landmark judgment. If we inquire about the case background, the case background is the decision by ATIR Lahore and relief for the banking companies and especially the loss-bearing organization which bears the loss, but they have to pay a turnover tax if they exceed the certain level of turnover. And issue is the minimum tax under section 113 and proceedings under section 122(5)(a), that is the power of additional commissioner, and there are a lot of notices and cases on this issue are in the pipeline by the department. What is the legal question? The key legal question is, can a minimum tax be imposed when the company is in the loss? If company is bearing a loss, then the company has to pay the minimum tax, and no normal tax liability exists because when the firm will be in loss, then there will not be a actual tax liability. And if there is no tax liability, then the company is to pay the minimum tax. That is the key question. And now we check the section 113, that minimum tax on turnover. It did not depend upon the company's earning a profit or bearing a loss. It depends upon the only turnover. If the certain limit crossed by the organization regarding turnover, then they have to pay the taxes applied instead of actual tax payable. If actual tax payable is payable or not, but the company have to pay on the turnover tax, that is the minimum tax, and ensure minimum contribution, that every organization which cross the certain limit of turnover, they will have to pay the minimum tax. Now what the tribunal interpret this situation, tribunal interpret that instead of actual tax payable requires a normal tax liability. If no tax payable, no minimum tax. The Appellate Tribunal IR elaborated it that if there is no tax payable or organization bearing a loss, then it should not pay the minimum tax. As you can see that if no tax payable, no minimum tax. It's mean every organization which is bearing a loss and they are not paying a normal tax, then if their turnover even cross the certain limit, then they will not have to pay the minimum tax as per the Appellate Tribunal's interpretation. They gave the reference of Supreme Court of Pakistan that Kassim Textile case minimum tax require an actual tax base. If there will be an actual tax base, then minimum taxpayer have to pay. Now, what about the loss making entities? Because normal tax is not paid by the loss making entities, but they have to, as per law, they have to pay a minimum tax when their company cross the certain limit of turnover. If the taxpayer has a loss, no tax under the normal regime, section 113 is not applicable. That is the interpretation of Appellate Tribunal. And now as the higher court decide, then the officers has to apply that on all the cases. Now we will talk about the section 122 5A scope, limit to the error in return. As per the interpretation of ATIR, if there is any error in the filed return, then limited access to the section 122 5A. Not they cannot do an inquiry and investigation and do more things, cannot conduct fishing inquiries and cannot add new grounds. They only check the errors if there are in the return. Tribunal findings are additions beyond the scope arises invalid. If beyond the scope they add any addition that is invalid, that will not be acceptable, and show cause notice binding only if you show cause, then the binding is necessary, show cause is necessary for that, and jurisdiction is limited. Bad debts and NPLs, authorities introduce a new provisions as it relates to the case, Appellate Tribunal's case. Therefore, I am discussing that Tribunal declared the ultra-vires and addition deleted for bad debts and NPLs. Interest income issues. Interest income is not a turnover. It's a income on interest. It is not a turnover, so interest will not be included in turn. No minimum tax applicable on interest income, and dividend and capital gains absorbed by the losses. No separate taxation allowed on dividend and capital gain. And the AJK tax credit, tax paid in AJK allowed, and avoid double taxation, because if our organization paid the tax in AJK, then it should be adjustable and credit should be given to the taxpayer if they have pay in AJK to avoid the double taxation. And if we talk about the legal principles, no roaming inquiries and no new ground beyond the notice. Only you are bound up to show cause notice, and you cannot roaming the new inquiries, and due process is mandatory for every process, every new inquiries. Practical implementation is relief for the banks and benefit for loss making companies, and because the loss making company did not paying actual tax, therefore they will not pay the minimum tax, and limits FBR powers that they did not inquire more regarding the loss making organizations. Impact on tax practice useful for litigations. All the practitioners who are listening me will be happy that if they have a lot of cases in the courts, at Commissioner Appeal, at the FBR offices, that the organization is bearing loss, but they have to pay the turnover tax and they are facing a notice of turnover tax. Appellate Tribunal, this case will be happy for those people that you can refer this case in litigation, and corporate tax planning can be made regarding the organization and assessment defense. Now what you will take the key takeaway the minimum tax needs actual tax. If there is no actual tax, then minimum tax shall not be paid. Section 122 scope in limited and interest not a turnover. If I conclude all the topic, then I will say that it's a landmark decision, strengthen the taxpayer rights and legal certainty. So please subscribe the channel, like, share, so that you follow it more for the more update regarding the case laws and FBR insights. Thank you very much. Have a nice day. If you have any question regarding discussions, or you want answer for the question, you can contact on the given number. Thank you very much. Have a nice day.